Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave Technical Analysis. Today is November 17th, 2013, and today I will touch on a couple of pairs that we covered last week, just to give a brief recap and to see where they'll head this week. Now let's just start out with the Aussie dollar. This is a pair we touched on in the daily video, covered it on the Monday's daily video, I believe. But with this cross, we see that prices have been in that corrective phase, so it's still on track downwards. So we had that larger A followed by 38.2% correction for wave B, and initial targets are set at 100%, so right at 92. So that's where we're looking for this pair to go. But as we take a closer look at what we have pegged out as our wave C, see that we had waves 1, 2, 3 completed, and now we're working on that fourth wave. Now it appeared that we already got the wave 4. You see wave 1, wave 2 was a 38.2% correction, wave 3 extended wave by 168. And then that fourth wave, we were anticipating that it will end at that 61.8% correction, represented by this red fib. Now it appears we already had got that, but we could see prices push to that level, so push back towards that 93.8 fib, and then correct downwards. But at this time, prices are at a suitable area to get short, and we would put stop losses at 94.2. 94.3. So if you can get in a bit higher, you can do so. Try to get in at 93.7. Prices go there. 93.7, good area to go short. So pretty much at a bounce off of this descending trend line. And then stop losses will be at 94.25. So above that 76.4% fib, which is represented right here at 94.25. Stops above that, and look for this pair to push lower towards 92. And that would be 100% off that wave A. Now another pair I want to touch on is the Aussie Kiwi. I did a chart of the day on this and touched on it in a daily video as well. And count on this one kind of threw us off a bit, so we were looking to enter it long on 100% completion of wave C to give us that larger wave B. But it appears that prices push below that level. So we were looking at longs at the 61.8 fib, which was, as I stated before, lined up with a 100% correction for wave A of B. So subwave A of that larger wave B, represented by that red B. So we see subwaves of that larger B. That wave B did a 50% correction, as illustrated by the fibs, and we were looking for that target. So that would have lined up, we were looking for longs at this level rather, at 1310, so 1.1311, around that area, and we saw that prices did break below that. So now our next target for it is set at 161.8%, so it's going to be a 1 to 1.618%, have a 1 to 1.618 relationship, A and that's C. So looking for prices to get to that level, so that would be a good area to get short this pair. So that's the wave 4. So that would be a good area to look to get long, rather. Good area to look to get long this pair. Though we could just wait for a confirmation with a break of this descending trend line. See that prices have been trading below it. Had a little head fake right here to give us that B. But prices have been trading below that, so we'll wait for a break, and the break would come on wave 1, correction on wave 2, then we would look to enter on a retest of this trend line. So definitely expecting a break in this pair, so I'll look for that is still upwards. The pound dollar, which was touched on in daily video on Wednesday, I believe, and with the pound dollar still have the bias to the downside. You see we had that larger wave 1, which was followed by what we had was a 61.8% correction for wave 2, but it appears there was one then that was a ABC formation. So that ABC, we see that prices have still found resistance at this descending trend line, even though I could adjust the trend line and it would push it up here towards that 76.4% fib. But as of right now, see that it's right there. So let's just try to take a look at the relationship between waves A and C. Now, wave A, 161.8% extension of wave A would put us at 162 for wave C, and that would put us at the 76.4% fib, I believe. Well, it would be slightly past that, actually. So we could see an extension of towards that 162 mark, but prices currently look at like they're at a good area to get short. Good area to get short right now, so you can get short here, put a small stop on that, so I'll stop at 1614, so about a 22 pip stop, and definitely looking for this pair to push significantly lower. So we can either do that, or what we can do is just hold off and wait for prices to break back below this 159.2 region. Once prices break back below that, that will be the confirmation that wave 3 is fully entrenched, and we would see prices push significantly lower. Still like it at that 156 area. So if we wait for that confirmation of 159, that's still 300 pips we would stand to gain. But for those that would love to enter the pair now, definitely look to go short at this level, risking 22 pips. If prices push above, then the next area would be 162, and if prices go above that, then we would then anticipate a triple top, and then we would look to go short at 162.5 again. Let's just also take a look at the euro. Another pair we touched on in the week, and we covered this on the daily charts as well as in the video. Now with the euro, so that we were expecting that we're going to see prices push downwards in an impulsive manner. So we already had that wave 1 followed by 38.2% correction for wave 2, and then we're starting out on wave 3. So we had that 1 down, and then we're working on that wave 2. Now prices are currently at that 76.4% fib, though we were expecting that it would push lower from this area, that 1.345 level, as we see that it retested this horizontal trend line which it previously broke, and at the time it was currently at this descending trend line. Well, prices did push above that, and it's holding this ascending trend line for right now. So for you guys that did take the trade at that level and put the stops above that 1.315 level, you guys are still in the pair as prices did not go that high. Definitely expecting prices to push lower as the count is still intact. So I'm anticipating that prices will push lower from this point. But for you guys that are not in the cross, you can definitely look to enter on a break of this ascending trend line, as that would confirm the move downwards. And lastly, let's just look at gold futures. Now, gold futures was touched on earlier in the week, and the count was revised, as initially we had this was our wave 2, and then this was the start of wave 3, but as we see, prices did push significantly lower in an impulsive manner, mind you. So with that we anticipated that wave 2 was not over, and in that this was wave A followed by B, and then this would be our larger wave C, and it should make a double bottom and push higher, as wave C would have a 2.618% relationship with wave A, wave C would. So with that said, as we're taking a look now, we see that wave C is in an impulsive manner. We had wave 1 completed, and wave 1 did a 38.2% correction, And then now we're working on that wave 4, as wave 3 already ended. Today about 100% move of wave 1, slightly past that. And wave 4, we're anticipating that it will push higher towards 1300 to give us that 61.8% correction, and then push lower to give us that double bottom, push lower towards 1250, and then it should take off from that point and start out wave 3. So definitely seeing this pair is going to push a little bit lower during this week after it pushes a bit higher, of course, first towards that 61.8% fib, so towards 1300 and then downwards. So that's the video for today. Any questions or comments, definitely feel free to jump in the chat room or send us an email. Paul or myself will gladly assist you with anything that may come up. For you guys trading, enjoy your week trading and good luck.